This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Where we want to educate you about our market, empower you to make wise decisions, and help you engage with our expert contributors. Let's talk about those people who can't do the normal loan. Those people who come to you and say, hey, I want to buy a house and I need a loan, and you look into it and say, hey, here's a problem, but what can they do? Is there other things for them?
There are. It's worth kind of introducing people to the idea that there are non-sort of government, non-inside-the-box loans that have really pushed forward in our market and are becoming a larger and larger segment of the marketplace out there. On normal mortgages, there's all kinds of reasons why you might fall outside the box. There could be your income that you show on paper, could be your credit, could be the property, could be any number of issues. And so these loans have come in and tried to make sense and say, is there a reasonable loan to give to a consumer who has this problem, and is there a way to make that loan safe and palatable to them?
Right.
So these loans have come into play.
Okay, but they're usually a little more expensive, I would venture to guess.
They are. In general, they kind of fall in the mid-range. I mean, if I layer it out into three tiers, which is basically your traditional A-paper, as we call it, mortgages, right? That are interchangeable, just and ability to be sold from one bank to another bank, is just like cash, effectively.
Right.
So those loans have the best interest rates. There's this alternative loans that fall in the middle. They're given out by traditional lenders, and there's got to be enough profit in there for the investor to be willing to hold that loan themselves and absorb all that risk, right?
Right.
And then there's the upper end of the spectrum, which is the hard money loans that are out there that are effectively saying, you put enough money down, you pay me a high enough interest, I'll give you the money. Let's say the most common situations we run into is that consumer who is, let's say, self-employed.
Right.
And they might use certain tax strategies to minimize their tax obligation, but has a consequence of showing the least amount of income for me when trying to say yes or no to a mortgage. So they might not make enough money on paper for me to say yes to what they want to borrow.
Okay.
This alternative loan that's come into place is what we call a bank statement loan that really focuses on the amount of money flowing through your bank statement as a basis for determining your qualifying income. So in general, they'll give you somewhere between 50 and 65% of the amount of deposits from your business activity or from your activity as actual income to see if you can afford to pay these bills. And now I've got a program out there. It says you put 25% down, they'll look at 1 month of your statements and use that as a basis for determining what your income is.
Wow.
No mortgage insurance?
No mortgage insurance, because all the risk is ultimately built into the interest rate to pay for it. They're verifying your credit history. They're verifying that you have the money. They're doing all those aspects, but they're willing to trade off and say, your taxes aren't the most important thing to us. Let's look at the cash flow that you have going on.
And these are traditional mortgage investors. You're talking about the big banks that are doing this?
Yes, they are large investors, some of which actually securitize and put their mortgages out there as bonds to Wall Street and this sort of thing. It's big business, totally legit, nothing that's going to necessarily scam you.
Right.
You just need to go into it with your eyes open. Another one that you get into a lot is the credit issues. So people that have gone through foreclosures and short sales or recent bankruptcy. And, we've all in this business, we've all come across consumers that have gone through an ugly divorce.
Sure.
And they wreck their credit. But they're through that divorce, and now they're getting back on their feet. There are loans out there, once again, that fall in the middle that will help somebody with a 500 credit score if you can put 25% down. If you're at 600, maybe it's 20%. If you're at 620, maybe it's 10% down. But you can have a foreclosure yesterday. You could have a bankruptcy yesterday on these products and get it done. I think it's a positive thing to have investors recognize that those borrowers are simply not, no, you can't be trusted to own a house and make your payments. It's, you can, here's what it looks like.
Right.
Not everybody should be thrown out.
This has been Las Vegas Real Estate Now. Thanks for listening. And remember to tune in every Tuesday morning at 9 a.m. on 101.5 FM, 720 a.m. KDWN.